Thanks very much, and thanks for coming to hear an update on RNC. Right now, we're quite happy, firing on all cylinders. As most of you may know, last fall we made the Father's Day vein discovery. We pulled out 25,000 ounces from the size of a small living room. We launched a 40,000 meter drill campaign. Didn't think we were going to be able to hit the high-grade structures because they're so high-grade, but we hit a 7,600 gram per ton drill hole in January, which gives us more confidence that we're going to see more of these high-grade zones as we move forward. We've got two key assets, and we've made major advances in the near term on both of them. I'll talk to first in terms of Dumont. We just updated our feasibility study. We're the operator of that project with a 28% interest. It's the largest battery metal project globally. It's one of the will be one of the largest nickel producers in the world, and then again in a market that's short of good lowest jurisdiction base metal projects and large battery metal projects. Dumont ticks both of those boxes. On the Beta Hunt front, as I said in the opening, we're busy completing a 40,000 meter drill program, which is going quite well. On Monday, we hope to close the acquisition of a mill, which will give a long-term milling solution to Beta Hunt, which again was one of the objectives we put in place when we first acquired the mine. And again, we continue to find more of these high-grade zones that I'll talk about in some more detail as we go forward here. This is an old nickel mine that happens to have a brand new gold deposit sitting underneath it. We're the first people to do any sort of material mining. Western Mining did a little bit in the early 80s. When we bought this almost 3 years ago, what attracted us was the fact that it was sitting on a pretty well-defined gold trend. All those yellow dots in the bottom right-hand corner are all gold deposits of various sizes. The other thing that was very attractive to us, so there's a 5-kilometer ramp system built for the nickel that's sitting directly above the gold. We also inherited 700 kilometers of drilling for nickel, which basically hit the tops of our gold shears. So we ended up basically with a roadmap highlighting 4 separate shears across a 4-kilometer strike length. And from the seismic that we have from the nickel days, we know that those shears continue for another 3 kilometers right down to the bottom of the property. I joke if that a Cisco owned this property, they'd have 12 drill rigs going. That's how many targets there are to go after here. Where we focused right now, again, when we first bought this mine, we struggled operating. One of the key things is we needed the money to drill it out properly. We now have that. And so the first 35 of the 40,000 meters is really just step out and infill drilling to bring the resource up to the level we want. We're very happy with both the grades and thicknesses that we're seeing both in Western Flanks and in our A zone. The green box there is where that high grade intersection we hit at 7,600 grams, and we'll go after it later this fall when it makes sense in the mining sequence to do it. In our A zone areas where we hit our Father's Day vein, that little yellow band there is the sediment layer that runs not only through our shears but basically across most of the Kambalda region. Where that shear and sediment layer hits is basically where we find high-grade gold, and so I'll walk through sort of how it gets there and what the possibilities look like on that front. Again, some people say, oh, the Father's Day vein was a one-off. You're not going to find any more high-grade gold. The reality is with this project, we found high-grade gold multiple times. We bumped into it for the first time in September 17. This mine was famous as a nickel mine that they would find a few hundred to few thousand ounces of high-grade gold around the nickel lenses, which were sitting on top of our gold shears. In September 17, we're 150 meters down from there, and all of a sudden, boom, some very high-grade specimen gold showed up. We tried to figure out why it was there. In the meantime, we put a stope in one place at the intersection of this sediment layer and shear, and again, another 1,500 ounces fell out. July, August, we went for the next level down. We went for the first place we knew there was some. Fortunately, we only got 180 ounces out of that vein, but about 6 weeks later from there, we found the Father's Day vein and had 25,000 ounces come out of the size of a living room. January, we hit that drill hole. The key thing with that drill hole, not only was it very high grade and another confirmation of this coarse gold existing, it was on a different shear, 300 meters away. So confirming that our theory holds across multiple shears and it's not just something unique to the A zone. And again, we hit it again in February. The theory of this really is such that there's a pyritic sediment layer that runs across the entire property. As the fluids come up through the shear, the gold hits this iron sediment, has to drop out, and basically drop out into whatever openings that are there. The grade of the gold in these veins, in the Father's Day vein, 20,000 ounces came from 2 tons of rock grading 40% gold. That's the equivalent of a dining room table about a meter thick. That's what we've hit. And again, as we've bumped into it, that kind of a grade somewhere between 15 to 40% gold is what we hit in these little veins. We don't know how often we'll bump into them, but we know wherever we have an intersection of those two structures, there's the potential for one or more of those veins to be there. That picture was what we had in our data room last June when we were selling the asset because we couldn't raise the capital to drill it. That's not the case anymore. And then that was the face in the Father's Day vein. So it was nice to have a very theoretical picture as to how we think this gold is emplaced. And then when you see the actual face where you see the sediments running through the shear and you see these very small veins loaded up with gold. In terms of the potential of the property, as I said, from the historic drilling, we think we've got 4 shears that are at least 4 kilometers in strike length, and that sediment layer runs through every one of those. So if you do 4 times 4, we literally have 16 kilometers worth of hunting ground to go find more of these veins. And as I said, we don't need too many. 1 dining room table a year is all we need to pay a lot of bills. The nice thing is right now, so that little blob to the right there is the area that we mined out to get the vein from the Father's Day vein. 7 meters below that, we hit a 1,400 gram per ton intersection on the projection where the sediment layer runs. Right now, we're literally driving into the area underneath that. So stay tuned. Sometime in the next few weeks here, maybe we'll have another more splashy rocks to talk about soon. In addition to what's happening at the mine, we acquired Westgold's Higginsville operation. Again, that gives us a long-term milling solution. We've been tolling to date. Australian dollar gold is up over $1,900 an ounce, and as such, the level of mining activity in the area is really accelerated. So milling capacity is at a premium, and so we're very glad to pick up a relatively new facility. It was built just over 10 years ago, but ultimately it saves us more than $15 a ton, or more than $100 an ounce in terms of our processing cost. So that's Beta Hunt. Dumont, what makes this project work? It's basically a large-scale, low-grade nickel deposit, similar to what you'd see in a large-scale, low-grade copper deposit. We're sitting in the Abitibi, next to a highway, next to a rail line. All the infrastructure is in place. We have low-cost power available from the Quebec government. So in terms of a low-grade deposit, you couldn't ask for a better location. In terms of the feasibility study, just over $900 million NAV. There's a number of additional upsides that we identified. This is a 30-year mine that still has another 30 years of resource that's there. Nickel has been out of favor, deservedly so, for the last while. It's now coming back into favor. Robert Friedland said quite nicely that nickel is the new gasoline as we move to basically a nickel cobalt-based transportation system. And this is one of the few large-scale operations that's available outside Indonesia. So we're attracting a lot of interest from various battery market participants who want long-term supply from a source like Dumont. It's the largest battery metal development project. How much time does that give me? 2 minutes? 1 minute, okay. We're the second largest nickel reserve in the world, and we'd be the 4th largest nickel sulfide operation globally. In our share price today, we're getting effectively zero for it, even at the sort of the lowest comp. There's 22 cents a share value in our 28% interest. And then with my last 30 seconds, I just want to talk about the nickel market. There's been pretty much no way to invest in nickel, or very limited ways to invest in nickel on the TSX or any of the North American exchanges. Nickel's been a very high growth metal for a long time, even without EV demand. There's a great Glencore presentation they put up a week and a half ago. I'd encourage you to pick it up in terms of how they see EV demand unfolding. Bottom line, we need to find all of the nickel supply that existed in 2010 and have that in production by 2025. We then have to do the same trick within 5 years if we have any hope of meeting trend demand growth and EV demand at that point in time. I can tell you there's nowhere near that amount of production available. So with that, I'd like to close with comments, and if I've got time for half a question, I'll take it. Or you can come by the booth. I'm there with the rocks. You can see them if you haven't seen them.